right, everyone, and welcome back to the Morning Edge webinar. And let's go and get started on the bias chart. Yesterday we had our support on the euro dollar at 581. You can see here the low is 585. So I was off by 4 pips. And I was looking for a bounce from that area. I said, eventually we can get down to 568. The bias pivot, but I thought that was a very bounceable area here. We're seeing that, although I think the risk, as I mentioned, going into the Yellen meeting is going to be that she shows that she's amenable to a potential rate hike in March. I think where you're probably going to see dollar strength is when she, probably first starts with her upbeat assessment of the economy. I'll say how you cannot be upbeat. The only fly, as I said in the ointment, is going to be wage gain growth. So I think there's a risk that we're going to, start heading back in. Now we'll have to see. It's just going to, like I said, it's all going to depend on how bullish or not so bullish, or hawkish, you want to call it that. She's not a hawk, but how open or amenable she is to that rate hike and what they're looking for as far as guidance going forward. For today, I think the bias pivot is key because, like I said, if she shows that she's really open, she talks more open, or that it sounds like they're more amenable towards, maybe a third rate hike this year. And I think she probably has to list that as a possibility. I mean, you can't see the economy moving along and not say, well, yeah, we'd be open to a third one if necessary. And I think it could really bring this euro down. Once again, I'm not saying this. I think that the pressure is going to be on going into this Yellen testimony and as she speaks. But we're looking at, what are we looking at as far as a real push? I think the 568 here, but I think there's a possibility we could even make it down here to 543. And if we get that, under that scenario. So 568 is a real bias pivot. So the only thing I would caution is, I guess we'll put the support here at 558. But I think, we could dip down here. This is where you could say, because you got 543 is the level here, and 520 is 61%. She'd have to be very, very, open and almost hawkish for us to get down there at this point. But I think that's how it's going to work. So for today, we'll just put it at, let's say 557 for right now. I think we have to give a little bit of a wide range. You notice that we've been putting in relatively tight on some of these pairs. I think we have to give it more of a wide range because, what could happen to the testimony. On the upside, I think we're going to have to do the same thing here. You have to give a little bit of a wide range, and we're going to keep that to that 581 here on the euro. I think, as I mentioned before, I think that we could actually start the day heading lower and probably finish the day heading higher. And a key would be on the way up, whether we could get above, if that was the case. If that was the case, we're going to dip down here. Let's say we don't even make it to 568. Let's say we make it to 570 or something like that, 572. And by the end of the day, towards the end of the day, we're above 661. And if we can close above 61, that's going to be very, very bullish. And that would then open the door for us to take out, eventually revisit these highs. We have to see what happened then. But right now, I think that going into it, there's not a rush. You're better off to see what happens, because then if she was really hawkish, she's not going to be hawkish, I don't think. But like I said, that would open the door for us to go much lower. And if they take out this 528, if they were to take that out, then that would open the door for us to go much lower. I don't think that that's necessarily going to be the case. but we'll see. You know, we're seeing gold start to move up a little bit higher. We're at 32.60. They're, you know, gunning some stops here because you're seeing the bonds are just kind of holding near the lows. So we're just testing some stops here on the gold market. So, but I think, like I said, the risk is that we can still move these lower right here. So I think you have to be, you know, cognizant of that. Just a moment. So this is said here, and I think we have to keep it like this for right now. But I think that that's how that could go in and play out. I think, like you said, that we could go lower, and then we could finish up the day a little bit higher. And we'll see how things stack up at that point. Let's go and move into the cable. This is probably going to stay within the range, but we got 24.16 and 26.37. In a way, kind of a bit wide. I think yesterday we thought that it was, you know, reasonably, it was going to trade this range, but it would look kind of at least a little bit bullish. And they dipped here. Because today is such a key day, I think we can still move up higher in the, there's the possibility that we could move higher, especially if the dollar comes off. I think we're going to keep these levels in here for now. If the dollar starts to, you know, gain during the Yellen testimony, it's going to open the door for this level here. I don't think it's going to be, we'll probably have to actually move this level a little bit lower. I don't think it's going to be any kind of a whitewash or anything like that, but we'll move it down here. I want to keep the upper one here. That's going to be 23.85. I'd rather move this lower on some initial dollar strength during the Yellen testimony. Now I'm going to move into the Aussie dollar. We're kind of clipping along here at a pretty good rate after we spent the first half hour just kind of getting an idea of what we were looking at, getting the tone for the market. Let's take a look here. And you can see here we're starting to break higher now. And we've talked about this is your resistance and where could it eventually go to. I think we did some work on that last week. And there's a 77.10. So that's what we were talking about. You see it right here. And I was saying between the 77.10 to 77.31. And we could sit up here for a while. Once again, a lot of it is going to have to do with what happens in the testimony today. I think that the Aussie dollar is bullish. One of the concerns was, and that they had pointed out also, was that despite the higher moves that we've seen in commodity prices, the Aussie dollar has failed to move somewhat higher. And I thought it should have already broken out of that range. So for right now, we're going to put this, we had to have it at 76.86, but we've gotten above it. Remember we had that 77.10, and that's what we're going to stay with for today. But this is one you have to be careful with because it's already on an up move to start with. And we're starting to go in and break out here. But I think that you, at least on this resistance, we're going to see 77.10. Actually, we might even have to move that a little bit. I think we have to move that higher. I think you'll see a little pushback, but if the dollar is to eventually succumb later on in the day to low prices, I think you're going to have to go with the 77.31 for now. So I think we have to update this really to 77.31. So hold on. Obviously, it's definitely bullish. The key will be, will it go in? We talked about this. Will it get into this? We'd see a little bit of a pushback here. Will it get into this range and just kind of stall out? It's, as I told you, it's reminiscent to what we saw. I don't know if it was the summer where that. We'll look for the back. Yeah, we talked about this yesterday. How we got into this area, and the market was pushing, and once it got up here, it looked like it really could take off, and then we just couldn't really do anything. And it looked like it was ready to really zoom, and it fell back in. Thought, well, you know, it was just a minor pause before it starts to reassert itself, and then you could see where the wheels really came off the caboose on this one. So it's almost, to me, I almost see something similar happening here. But the Aussie is not the type of market, unlike the Euro, it might hang just for a little bit and then turn around and start moving back and forth. It kind of hangs for a while. So I can see this, as I said, moving into this area, stalling, sitting there stalling, maybe pull back. Maybe we take out the highs and challenge up in here, and then we come back, and then also we have to come back for a correction. But only time will tell. That's something that would really have to take some time to work out. We'll see how that plays out. So let's go on and move into the Kiwi. And it's up here. So for the Kiwi, we had 71.23 and 72.42. We're looking at it just bopping up here. Today's going to be an interesting day. Like I said, if the dollar succumbs post the Yellen testimony, then obviously this will open up higher. And we talked about this. We said it could get above the bias pivot, and then the key is going to be, what does it do above the bias pivot? And we said it can get above the bias pivot, and then maybe within 48 hours or so, maybe a little bit longer, it can end up losing the bias pivot and open the door for lower. I kind of think that's where it's going to go, because it should have already done this. As a matter of fact, this may take a while. If that were to play out, it may take a while to come to fruition, depending on what happens with the Aussie. But if the Aussie were to go to these highs and then turn around and not be able to sustain if it goes to new highs, then that's where you would have a problem with it. So I think the key, the resistance, would be there, 72.64. And I think they'll have a tough time getting beyond that, even if you can get above this bias pivot. So I'm going to go with 72.64. You saw where they broke that downtrend line. And if you break a downtrend line like that, not always, but more often than not, you have to do a little bit more homework than a 38%. You see what I'm saying? I would see something at least closer to 50%. And then maybe it could try and reassert itself. But this would be a very shallow correction, and you've had a pretty good move up in here. It seems like when you see that kind of break and you're looking at the market, technically speaking, you think, well, I like it. Let's say you like the Kiwi, but you said, you know what? Technically, I can't buy it here. I'm going to have to wait for at least a 50% pullback, even though I think I like it, just based on the technicals. I think that just a 38% pullback is not enough. You have to see the market come down here, do some homework, then you see what it's made up of. So I think that if we do see that dollar weakness post the Yellen conference, or not post conference, but her testimony, we can get above the bias pivot. But I think that it'd be limited to in this area here. That'd be good resistance for an area where if you thought that, yeah, I think it's bearish, I think I have to do some work. That's where you could look at and say, I think that's a good area here. Obviously, be above the bias pivot, but we'll have to see, if you're hell bent to think that way. And I think that there's a chance that we won't be able to do too much. Then we can move lower. I think we'll have to test lower and do some more homework before it could possibly, move to highs. So now with support, I think the support is still going to come in here. This is 71, 23, 25. I think we already had that marked off. And let's take a look here. Once again, the highs here, we're saying 72.64. So let's go and mark this off. It broke past the trend line, but you'd still have to say it's bullish, at this point. Especially, let's say it would have held here and then start working higher. How could that really be in the range? Yes, it's broken here, and on a short-term basis, it needs to move lower. But that being said, I think that we're going to have to, you have to go and say, yeah, this is still bullish, but I think we'll have to eventually come down here, maybe somewhere closer down to the 50%. But like I said, post the Yellen congressional testimony, you could see the dollar then weaken. That'll open up the door for us to get above the 72.25. I just don't think there's going to be a lot of juice once we get past that. They could just kind of stall in this area, and then if the Aussie does eventually weaken, that could really end up yanking this down. So we already marked this off here. And we'll move into the dollar CAD. So we had 30.32 and 31.31. That's where we're at right now, 31.31. We're here on support. So they did come down here. They're testing it. We said it's just kind of a mixed bag. I mean, right now we're seeing the crude a little bit higher. We said overall, the crude oil prices, that's not saying a whole lot, but they will have some impact. We're seeing the bonds kind of tick up a little bit here, not much, but so we talked about this yesterday. I think we mentioned that if it broke lower, that it really would open the door probably for them to move a whole heck of a lot lower. Because if we, like I said, you came down here and you tested it. I'm just saying, looking at a structure standpoint, you tested it, and it looked like we could move lower. And so they gun all these people. All these stops got stopped out. And we came to that resistance here towards this 32.18, fell just short of it, and we started sliding again. So then anybody that sees that is like, well, who's left to buy it? This thing doesn't even look very good. And as I was saying, if it were to break past here, that would open the door for us to go much lower. And I think I guess we didn't save it. Hang on, let's take a look. I think we were looking at like 161% if it would eventually continue to break. That's where we had that. Because if it were to break here, and it already looks like it's breaking here, we're getting some support, but that's at 30.31. Nobody want to get bullish until it goes way down here. And we've got the 61% of this entire move, and then this 161%. That could be a flush, and then you would look at the market from that at that time. So we're going to mark this off. But this dollar CAD really looks like in no man's land. And the more you look at it technically, it looks like it's just going to have to go down and do some homework. So let's go mark off this 28.17 being the 161%. If we end up breaking lower, my guess is we'll probably eventually come down here. We'll up to 61%. I'll have to go a little bit lower, and then if the market shows what it's made of, then it can try and make a stand. So as I mentioned before, when you look at this market, um, we're pretty oversold. So the market looks like, okay, we're gonna go and make a stand here. We've come to the low. You can see all the touches coming across in the zone. So they try and make a try and make a stand. They really I forgot which the BOC made some. There was some comments besides the interest rate thing, but there was some comments. So it really sparked and got the dollar CAD moving. And basically, all you did was you stopped out all these people that were short. Because if you looked at the market, it looked like, wow, we're probably gonna. We even talked about it. We're probably gonna make a move down towards this 129, 128 area here, and it looked like that. It looked like it set itself up for this lower move, and then we saw this stop run, and it really knocked out a lot of people up in here. And we talked about, wow, I couldn't even believe it when it made that move, but we had our 3218, the other portion of this zone, and they came up short of that. And it starts falling apart, and it looked like, okay, we're just getting some backing and filling, but if we start to lose this, I think we mentioned, if we start to lose this 3083, it's really going to throw the market into basically a tailspin, because then it's like, wow, if it went through all this and then it immediately starts losing, then there's just not a whole lot to hang its hat on. And if that's the case, and we take out this area, they're not only going to gun the stops, but even anybody who's even thinking about being bullish won't even buy. So they'll say, no way, I'm going to wait till we go much lower. And so we have to go for technical targets. That'd be this 61% here and this 161. I think that we could bounce from this pink area. That 2909 is pretty decent, so we'll probably see a little bit of a bounce, but we'll probably come into this zone here if this all plays out and probably find some support. But before it's all said and done, we'll probably end up dropping below that on some day, whatever it's going to be. It could be an employment report, whatever. And then from there, we could try and start to build some semblance of a base if that's what they're going to go and do. So, but that's what we have for right now. Here on this dollar CAD. For today, the support, we're just going to mark it off here. Right down that low. It's going to be 29, well, I think the low is 29.68. So we'll say 29.68 and resistance if the dollar really start to have a lot of trouble. For really right now, it's just 30.83. If you look, but we're trying to give more leeway because the congressional testimony. So again, say 29.68, 31.31. And we'll be back. And thanks for joining us here on the Morning Edge webinar.